Welcome back to America's Forum. I'm J.D. Hayward.
And I'm John Bachman. J.D., let's talk about money a little bit. Investors are closely watching today as Janet Yellen is set to take the helm of the Federal Reserve, or at least have her first press conference as the head of the Federal Reserve. Today marks her first conference as chairwoman of the Federal Reserve. She will host that news conference today after the Fed issues a statement at the end of its policy meeting. She is expected to toe the same line as Ben Bernanke did, but also some folks are looking closely as whether or not Janet Yellen will increase the amount of pullback on the Fed's stimulus program. Joining us right now to talk about all this is Newsmax financial editor Jeff Yastine. Jeff, it's great to have you here.
Hi.
So much attention is paid to these press conferences, JD. I don't know what it looks like from Congress, but for the investor out there, do we focus too much on what the chair of the Federal Reserve has to say on these types of
I tend
arenas?
to think so, yes. A lot of it after the press conference is very sort of inside baseball. If you're just a normal investor, someone with 401k and all that, it really doesn't matter to you in that moment, in that half hour that the press conference goes on, is not ultimately that big of a deal.
Well, let's talk about, apart from the press conference, what really happens in terms of Fed policy. We've seen all this so-called quantitative easing, and we're waiting for a day of reckoning fiscally with what happens to the value of the dollar. Does Yellen stay on the Bernanke quantitative easing train, or does something start to change here in short order?
The Fed's already been shifting gears gradually. I mean, as last year closed, they were doing went from 85 billion stimulus, this bond buying every month by the Fed, to 75. Now it's at 65, and I believe the expectation is that when the meeting ends today, that they'll have said that they're going to lower stimulus down to $55 billion worth of bond buying every month. Maybe by the end of this year, if everything continues to go, they'll continue to get that stimulus down to, maybe down to zero. Who knows? The interesting thing is, though, that the target for the Fed has been to get, they said they would continue stimulus until the unemployment rate got to 6.5%. Now, the last data was 6.7%. So, and the economy continues to sort of muddle along and slowly expand. If that's the case, at some point, somebody's going to say, hey, Fed, you're at your target rate. Or are you going to just stop stimulus? So now it sounds like they're going to start adjusting the language. Instead of having a quantitative target, 6.5%, now it's going to go to something like what the Bank of England did most recently, where it's like, well, we have that target, but we also have this other stuff in terms of factory capacity and all these other sort of what they call qualitative descriptions of when they might lower rates. It's a way to basically say, without saying it, we're going to keep interest rates really low for a really long time without actually coming out and saying it. I mean, that's what the cynic in me would say.
Now, Jeff, we've heard the announcement about this $10 billion pullback from the stimulus. Is this another additional pullback from what we heard kind of forecasted early on?
I'm sorry, was that today?
Well,
because
it's hard to keep it straight, and that's
exactly.
that's my point. And when you mentioned also that there's the economy remains sluggish, if not stagnant right now, how much of that is attributed to the fact that we still have these low interest rates?
I think without these low interest rates, the economy would be much worse off. But to go back to what people were saying 3 and 4 years ago, had the Fed not done what it did, we'd probably be on the way towards a much more aggressive expansion, because you would it'd be extremely painful, but you'd wipe out a lot of the dead wood, and we would be rebuilding as opposed to, in a much more aggressive way, as opposed to what's going on now. Now the Fed, again, until I can't remember now, September, October, the Fed was maintaining that full-on quantitative easing of $85 billion a month. Every month, they would step in and buy that much in the way of mortgage-backed securities and other types of debt securities. And they've slowly been withdrawing that. And the expectation was, unless the announcement came out sometime between the point I left my office and here, was that they would lower it from $65 billion currently to perhaps $55 billion for April.
And so what this is, they forecast this a little bit to try to get it out there, so it's not a shock when it officially happens, correct?
Yes, exactly. So, and that's the whole thing about today's Fed versus, say, 30 years ago in the Volcker era, which is today it's a lot more about telegraphing and quote-unquote transparency If the Fed has something they need to say, but they can't actually say it out loud, then they call up somebody, you know, a favored reporter at the Journal or at Bloomberg and leak it that way. And it's a way to telegraph these things as far as what they're thinking about, or float a trial balloon.
Now, it's interesting, Jeff, as you're laying this out, and in my mind's eye, I picture that towering cigar-chomping Paul Volcker of 30 years ago. Now Janet Yellen, and obviously atmospherically, in terms of appearances, here's the first chairwoman of the Fed. I know that so often we talk about the Federal Reserve, and I believe one book was entitled Secrets of the Temple. But really, when we look at the Fed, how important is the chair in making the position, or are there others on the Board of Governors that really tend to be the catalysts behind the scenes?
That's a good question. I think during when a new Federal Reserve chair comes on, as Janet Yellen is, the markets need some convincing that this person knows what he or she is doing. You know, Alan Greenspan wasn't Alan Greenspan with a capital A and a capital G, so to speak, when he first took office either. It was only later, after he had proven himself, as well as, you know, having the fortune of the markets moving higher. And again, whether he helped to engineer that, or whether it's just sort of the lucky take there, I don't know. But the fact that that happens, again, the further the new Fed chairman can go as far as having that credibility, and with the markets doing something well, like going higher, the better off they are. So at this point, she has less credibility, and it's sort of, to the markets, it's like, hey, show me, prove it to me.
Jeff, we saw that when this announcement first came out, there were some other issues there as well, including the crisis in Ukraine, but the stock markets hit the skids there for a little bit. They've rebounded, of course. There's a lot of volatility in the stock market. But with this forecast, the telecasted announcement, we shouldn't expect much movement as a result of this news conference, unless she says something that's earth-shattering.
After Ukraine's the situation last Friday, with a big sell-off and the rebound, I don't think we'll see much, but
who knows?
We'll
keep watching.
My crystal ball is a little foggy at the moment.
That's why we have to stay tuned and continue to read what you write on the economic pages, Jeff Yastine. We appreciate that. Thanks.
All right, more ahead here on America's Forum. We want to hear from you. What do you think about Janet Yellen? Do we pay too much attention to the Federal Reserve Bank? Does it need to be audited, as some members of Congress think? You can reach out to us on social media. Find us on Twitter at Newsmax TV, hashtag America's Forum, on email, connect@newsmaxtv.com, or on Facebook, facebook.com/NewsmaxTV. We'll be right back after this.